Hey, thanks for checking out another video from NetPicks. This video here, I just want to expand on the last video I made where I talked about AMC and I talked about Gamestop and how new traders are entering markets, stocks without plans, pretty much only based on Reddit information, TikTok videos, and Twitter. Let's talk about the short squeeze in AMC briefly. This morning, pre-market, it rose to $17.25, and by 10:30, it dropped to $13.48. Probably panicked a lot of longs, no doubt. They sold out, and that's what happens when you don't have a plan. Anyways, back to Reddit. And really, over the last few weeks, we've seen basically a Reddit phenomenon. It's taken over the headlines, and to some extent, it's taken over complete segments of the stock market. Right, in today's landscape, it's no surprise that the idea of group sharing has reached the trading world. We knew it was going to happen. And so for those of you that are new to Reddit, because you've seen what's been going on, the whole concept is to share opinions, share thoughts, and share ideas in a group format for everyone to see. And if you just search for Reddit on Google, you're going to see that their tagline is the front page of the internet. That could actually be expanded to say they are the front page of the stock market right now based on what we've seen. And people that have had no interest in trading stocks just a few weeks ago, now they're just glued to every price movement back and forth throughout the whole day. Just the last few days, a lot of traders that I know, they've heard from family members, they've heard from friends that they haven't heard from, asking them about trading GameStop, trading AMC. Got retail traders who are just opening up trading accounts at a record pace. So really the interest in the financial markets is probably pretty much at an all-time high right now. And really it's been pretty cool to watch as a trader. But you have to ask, has this whole movement with Reddit changed the trading landscape? So let's take a look back at a few weeks. Now we've seen stretches going back in time where the popularity in financial markets exploded. So if you go back to the tech bubble in the late 90s and early 2000s, we saw retail traders jumping into the markets with both feet. We've seen the housing bubble back in '08. Everyone was focused on buying and flipping homes, and that led to some instant riches for quite a few people. But what did these periods have in common? Well, they both eventually led to a big financial crash. Now, of course, I'm not saying that a market crash is imminent, but it's really important to recognize that in the near term, there is a clear warning signal that's just flashing for everyone to see. Right? In most cases, that whole mania stage occurs near the tail end of a movement. So when retail traders start trading with extreme leverage, like we're seeing now, okay, you know that the boat is pretty much loaded on one side. And that can really lead to a market reversal pretty quickly, and you got to be on the lookout for that to happen. Now, whether or not you agree with the premise behind the Reddit movement or not, the bottom line is that we're seeing how retail traders joining forces can have a huge impact on the way a stock trades. Okay, these new traders have united in the Wall Street Bets Reddit group, and that's pretty much dominated the trading news. Now, some of these new retail traders are in it for a quick buck, and I think others are in it to try and stick it to the big hedge funds that have been accused of rigging the markets in their favor. We have the COVID-19 pandemic. It's heightened this movement because, look, a lot of people are out of work. A lot of people are looking for any way to make a buck. You got more people stuck at home with more time to pay attention to news on social media. So it's pretty easy to get sucked into that movement. But then that can lead to extreme moves in stocks like we've just been seeing. We're also seeing a whole new wave of younger traders that are getting involved in the markets for the first time as a result of the wild moves over the last few weeks. GameStop, AMC, we're hearing of stories of young, you only live once retail traders using their parents' mortgage money to trade these Reddit stocks. That's not something you generally see at market bottoms. So the last few weeks are a perfect example of how important it is to be open to new trade ideas as a trader. You got to stay nimble as the markets will change over time. And right now we're in a shift where that retail trader has to be respected. So am I saying you should start trading based off of Reddit information? Absolutely not. But we got to recognize that trends can develop, and for a variety of reasons, they can lead to historic price movements. And managing risk, something I talked about in my last video, it's more important right now than it's ever been. And a lot of volume is coming in. And while the amount of risk being taken right now by these new traders, it's alarming in a lot of cases. But I look at the growing popularity in trading as a really good thing in the long term. Because now we have a new generation of traders getting attracted to the markets. And as many of us know, once you get involved in the markets, it's really hard to step away. So some of these newer traders are going to be hooked for life, and that's a good thing, because that's going to help with the liquidity in all markets, which is great for new traders. It's great for older traders. Now, the average daily trading volume in equities was 7 billion shares in 2019. In 2020, just under 11 billion. And so far to start 2021, the average daily volume has skyrocketed to just under 15 billion shares. That's huge. That's just in January alone. Trading volumes are up 92%. Now, the big volume, it makes life easier for all traders. Now, we may not be able to maintain the January numbers long term. We believe the volume numbers will stay pretty active long term. That's a good thing. We will all benefit from the added interest in the markets. It's just really important to not get carried away in these manic moves that we're currently seeing in individual stocks. We don't want to think these extreme price movements are the new normal, because they're not. Stocks like Gamestop moving 100% on a daily basis, that's not normal, okay? And we can't expect these moves are going to last forever. And here's another problem. The excitement in markets that's grabbed the attention of the world come with a lot of controversy. Just this past week, we saw many brokers restrict the trading on these stocks to closing transactions only. Robinhood, that was at the center of this movement last week as they cut off the ability to buy any stock on stocks like GameStop and AMC. The trouble with this move is it completely shuts down the free market. Now, Robinhood's a newer broker over the last number of years, and it was founded on the idea that they were the broker that would fight for the small retail trader. They offered commission-free trades. They've tried to cater to the on-the-go trader who want to trade from a mobile app. The trouble is, as we all know, nothing is free in this world. There is always the cost of doing business. So Robinhood made their money through payments for order flow. So what that means is market makers pay brokers like Robinhood to execute customer trades. Here's an example. You have a market-making firm like Citadel pays Robinhood a fee to execute their customers' trades. This can lead to large profits for the brokers. However, as we saw, it can also lead to a conflict of interest. It was rumored that Robinhood limited trading on some of the most active stocks at the request of a few large hedge funds that were in trouble due to these large price swings. That's a huge conflict, and it completely takes away the idea of free markets. Now, this only fueled a fire that has been started by Reddit traders looking to punish the big hedge funds that run Wall Street. So the huge volumes and the crazy trading last week also put a strain on brokers across the market. A lot of brokers ran into issues with their platforms going down due to the wild trading that they were seeing. In some cases, traders, they couldn't even get into their accounts for hours. That is not a good situation when you've earned money, your hard-earned money, and you put it into trades with volatility exploding. Now, while we could discuss the broker dilemma from last week in a lot of detail, the takeaway is be very careful with who you use as a broker. Right? So make sure you're trading with a broker that's well capitalized, their software is reliable, it's not going to crash in volatile markets, and that are committed to protecting the individual trader instead of selling them out to the big institutions. Who do we like? tastyworks. It did not run into a single issue last week. It's a great platform, low commission rates. And we tell our traders here at Nitpick all the time, be open to using different brokers. Don't get locked into one regardless of how long you've been with them. Because if you get a more stable platform or lower commissions by making a change, it's probably well worth the effort to do it. And we also use and recommend multiple brokers if you can. This way, if one of them runs into an issue, you're not locked out of your ability to trade and manage risk. Speaking of risk, the forgotten variable. Now, we talked about it. All this new interest in trading is great for all traders. But the last few weeks have really highlighted the importance of risk management. And I talked about that in the last video. So what we thought to be impossible has been proven possible with the moves that we've seen. So if you would have told me a month ago that stocks like Gamestop and AMC could move 200% in a matter of hours, I would have said, no, man, that's crazy. Well, we're seeing it, right? Anything's possible now in this new age of trading. The troubling part of the last few weeks for me, and for a lot of traders I know, was seeing the amount of risk that was being taken. Too many traders are just throwing everything they have into trading without any concern for the risk that's involved. When markets get active, like we've seen the last few weeks, it's really easy to get caught up in the excitement and trade too big because you're afraid of missing out. FOMO. So in reality, the best approach right now, trade small. At NetPicks, we have been saying it for decades. Keep the risk 2 to 5% of your account per trade. If you take that approach, you can still get a nice profit potential, but it'll be a lot safer. Because it's really easy to look at these 200% moves in GameStop and think about the massive profit potential behind a move like that. But you got to keep in mind, stocks don't always move higher. Okay, we see big moves lower as well. That if you're caught on the wrong side of those big moves, it can hurt. Personally, we also prefer that traders take a larger number of small trades. So spread your risk across 5 to 10 stocks instead of just focusing on the 1 or 2 that happen to be headlining at the moment. Because that diversification that you can get from taking a large number of smaller trades leads to a far better consistent trading over the long term. Now it's easy to get caught up in the hype that surrounds Reddit stocks, right? Who wants to trade Apple and Facebook anymore when you got GameStop and AMC moving 100% in a matter of minutes? But as I mentioned, the moves that we're seeing right now, they're not typical. We're going to see markets settle down. And when that happens, it's really crucial to make sure you trade stocks that have a track record of good movement. Apple and Facebook, they're not going to move 100% in a day. But their track record is established over years of really good movement. They're liquid, a lot of volume every day. It's going to be a lot more of a stable trading vehicle that can still produce a pretty good return on your investment. And GameStop right now, look at the chart. It's pretty difficult to trade at this point. It moves so quickly and markets are so wide on the stock and the options that it's difficult to get filled quickly and at good pricing. I'm not saying you shouldn't trade it. I'm not saying you should trade it. But if you do, just use very small risk and make sure you're picky with your order pricing. Our trading's been great the last month in so many areas of this market, right? Don't lose sight of the markets that have been active for years. There are so many great stocks and ETFs to trade that's going to produce great returns in a safer way. You would probably be far better off longer term if you learn how to diversify through different products, keeping your risk small. Anyways, let's wrap this up because we're seeing a transformational shift in the trading world in front of our very eyes. It's kind of cool to see. And it can provide really great opportunities for active traders as long as you don't lose sight of that big picture. We have to temper our expectations, knowing that the movement in stocks like GameStop and AMC, that's not sustainable. Okay, you don't want to build your business around trading these stocks exclusively. Instead, you're going to be far better off focusing on a diversified risk of stocks and ETFs. Right? Focus on trading those in different sectors while keeping risk management at the forefront of your trading. Making sure that you're trading with an established, well-capitalized broker, absolutely crucial as we all navigate these pretty crazy markets. And really, there's a huge opportunity in front of every single one of us. These next few years are going to provide really good markets, right? Really good conditions for active traders. These Reddit traders, I think they've changed the trading landscape forever. And really, that could be a pretty good thing. Thanks for watching. Hit like, subscribe, give me a comment, and we'll talk to y'all soon. Good luck out there.